are you troubled by what we're seeing with GameStop and some of these other stocks, Mohamed?
I am troubled, Joe, because it is enabled by very distorted financial conditions. Look, there's 4 levels to this element, and you've been covering them. One is the pure hedge fund versus retail anti-establishment. That doesn't have broader market implication or financial stability. The second one is the changing market structure. The third one is the interests of regulators and politicians. And then the fourth one is the one that really has a lot of market implication. Is this the beginning of the accident we worried about because of over leverage, over excessive risk taking? Or is this simply another buy the dip opportunity for market participants as hedge funds degrowth? That is the key element for your 401k. The other stuff is really interesting, but the bottom line is, do you believe this is the canary in the coal mine, or is this yet another buy the dip opportunity?
Right, and it wouldn't be a causal effect. It wouldn't be causation. It's just symptomatic of what we've seen. And I certainly think, I mean, I can blame the Fed on the front end and the back end. I blame them on the front end for exacerbating the inequality that so many people feel right now, that they don't get a fair shake, and that the elitists, the game is favored in their, it's in their favor because they were the asset holders for the last 10 years. And, savers made nothing. And anyone that had assets has been enriched, even during the pandemic. We've seen how well the top end is done. So the Fed orchestrated that, or maybe it wasn't their fault. They didn't have much choice. But they're responsible for that. And now the endless printing we're seeing to try to juice the economy is what has inflated all these bubbles. So but I wonder, like you do, whether this is representative of an unraveling of a lot of different markets. And it scares me.
Yeah, it scares me too, Joe. I've been talking, and I wrote a book about it in 2016, The Only Game in Town, is be careful about the unintended consequences of relying for too long just on central banks. And you've talked about them. And that's why Chairman Powell didn't want to touch this yesterday. He did not want to go anywhere near this, okay? Because he knows that this is a really complex issue. And his hope is just hand off to fiscal policy so that we can stop worrying about this. That's not going to happen. So you've got to worry about what are the consequences of distorting markets for so long. Let's not forget that behind all these shorts of 100% plus is rock bottom interest rates and abundant liquidity, which means the cost of shorting, of leverage, and the availability of leverage are completely in the interest of the person wanting to leverage. So the likelihood of accidents is high. Remember August 2007, it started small. So keep an eye on this. I'm not saying this is the major market accident, but I'm saying that if you care about financial stability, you've got to look at this really carefully.
You're right. Thai baht, no one ever even talked about it until it happened. Cyprus, no one even talked about it until it happened. And it could be something small, I guess. And we remember when hedge funds, if it's big enough, whether it's a long-term capital or something like that, if enough of them need to liquidate good stuff, then the good stuff starts going down too, and then that can feed on itself. Do you see something? Is this a small string being pulled on that could unravel, Mohamed?
That's what happened yesterday. Contagion. Remember the word contagion, because if you are in a losing position, if your broker's calling you saying, hey, your margin requirement, your margin call, you got to make some cash. What are you going to do? You're going to sell what you can sell. What do you sell? Your most liquid instruments. So we saw that yesterday. The market as a whole gets hit, including the most popular name, because they're the most liquid names. And then you have a few stocks that go up. Behind that are people covering their shorts and having to raise capital in order to do so. So that is a typical contagion where something small up here creates something big up here. The big question is, will the buy the dip mentality save us? Will people think this is yet another opportunity? I don't care about why it is that market have sold off. I'm just going to buy it. So keep an eye on this. It's going to be fascinating in the next few days. But there are broader financial stability issues that we must not forget.
Shepard Smith here. Thanks for watching CNBC on YouTube.